Hey, Daniel Sablina here for Rottweiler Tax. So the government, in response to coronavirus, one of the things they've done is extend the time you have to file your taxes by 3 months. So the normal deadline would be April 15th. The new deadline is July 15th. Here's what makes this particularly interesting. Normally when you file an extension, which is a 6-month extension, not 3 months, it only extends the amount of time you have to file the tax return. The taxes are still due on April 15th, but in this case, they've actually extended the time you have to pay as well. What this means is that you can wait until July 15th to file your taxes, not make any payments until that time, and you won't accrue any penalty and interest for paying late. So I'm going to give you a couple ways you can take advantage of this, because since you have this extension period now, it gives you an opportunity to take some of this time while you're inside and have nothing better to do and figure out how you're going to get your 2019 taxes down, because that's going to allow you to preserve a lot of cash during this year, whether you file in July or otherwise. So the first recommendation I'm going to make is take a look at your vehicle expenses. I've done a totally separate video on this. You can find it on our YouTube as well as on our website. But a lot of people are actually losing out on their vehicle expenses because they're just taking mileage. It's the simplest thing to put on a tax return. But for a lot of people in business, it's not the best deduction for them to take for their vehicle. So take a look at that. Look at what the differences would be if you were to do actual expenses and depreciation versus mileage this year, and see if you can get a much better deduction through taking the actual expenses, including looking at the potential for accelerated depreciation. That's a very useful tool for a lot of people. The second thing that I recommend that you do is take this opportunity to get a system like QuickBooks installed in your business. Forget Excel spreadsheets. I don't recommend those. You want to get a system in place to keep yourself organized. Of all the consults I've done in the last year, the vast majority of people who schedule a time to talk to me say that the main reason they schedule it because they feel like they're disorganized. So if you feel like you're disorganized, now's a very good opportunity for you to no longer feel that way. And since you're stuck inside, you might as well do it. It's something you should have in place anyway, and it's going to make not only the short term better, but the long term, both later in this year and in years to come. If you put this in place now, it's going to do you so much in the months and years to come. Now, the last thing I'm going to recommend that you do during these 3 months you have to do a little bit of tax planning is to review your business structure. More often than not, people are using S-Corps nowadays. A few years ago, very few people knew about these. Now they're becoming more common knowledge. What they don't know is that because of the 2018 tax cuts from Donald Trump, the ideal entity for you to use may no longer be an S-Corp. I'm seeing people lose sometimes up to $10,000 by using an S-Corp when they actually should shift back to a sole proprietorship. And this mainly has to do with the new QBI deduction. Because they've added this new deduction for pass-throughs, and you lose a portion of that deduction with the S-Corp, it ends up coming out better if you were to just take full advantage of that deduction as opposed to taking advantages of the S-Corp structure. I look forward to seeing you in the next video. Stay tuned for more great content, and we will get through this together.